6 of the 8 biggest credit card issuers in the United States not only have some of the best credit cards in the marketplace, but also happen to have physical bank branch locations. Only 2 exceptions exist: Discover Financial and American Express. So I want to unveil to you a tactic that will actually increase your approval odds with these issuers as well as other major banks, a way you can leverage those deposit relationships in branch preferably that you probably haven't heard of. It's a simple but effective strategy in influencing the way the bank views you when you apply with them. Now, before I give you insight on this hidden strategy, we need to set proper context for it all to make sense. Many, if not all, of the major banks have shifted their business model in recent years. There's a couple reasons why for that shift, and a few big ones are going to be the unstable economy we've experienced, rampant fraud, and advancing technology. Banks are more cautious than ever when it comes to who they're doing business with, and they're using more sophisticated ways to assess these relationships as they're established and as they grow. Major changes in interest rates and the supply of money and consumer health, which is directly tied to the bank's bottom line because that's their clientele base, as well as criminals getting more advanced and aggressive with their fraudulent activity and behavior. I mean, let's be honest, banks' backs are against the wall with staying profitable and minimizing losses. Now, I know, right? Cue the violins, these poor, super rich financial institutions. But hang with me for a second because this all connects back to you. Okay, before we get back on top, you have some excess capital that your bank's no longer paying you that same return on. Now that interest rates are down, you're looking for a stable, purposeful, and profitable place to invest your money. What if I told you can support one of your favorite content creators whilst they're earning a respectable return on your money? Yeah, that's right. The platform sponsoring this video is called Oversubscribe. It's a SEC regulated platform that's connecting the audience and the creator like never before. It's an opportunity for you to invest in this channel and share in the profitability in this channel as it grows. There's no commitment right now, but there's a link in the description. You want to learn more? Fill out the quick form and let's get in motion. So with all that being said, one of the top changes that have taken place is larger banks are becoming more relationship focused. I don't know if you've noticed, but bigger banks are starting to mimic credit unions and community banks with their relationship focus, and it's bleeding out into their products and their underwriting. So let's look at a few examples. Chase Bank rolled out the Freedom Rise not too long ago, a credit card designed for those who are new to credit. One of the prerequisites for approval is having an active deposit relationship with at least $250 at the time of the application. What about the revamp of their Chase Ain't Cash business card? What's a new bonus opportunity? Having an active business checking account at the time of your yearly anniversary will get you a 10% bonus. Bank of America only allows you to apply for 3 credit cards in a year if you don't have a bank account with them. That number grows to 7 if you do. Here's a side note for you. In case you didn't know, FICO and Vantage are starting to bake in banking data into your credit scores. That's right. So I hope you get the point. These larger issuers are using relationship banking as a buffer and as well as a greater access point to your data. They want to know who their customers are, and this information is better gathered through deposit relationships than just credit cards alone. So how does all of this info open up a pathway for you to minimize declines and increase your approval odds with these issuers? Well, having an active deposit relationship should be an obvious one at this point. What if I told you it goes a little deeper? Well, banks aren't just analyzing your deposit relationship. They're analyzing your entire household relationship. That's right. These banks are bucketing the entire households by their relationships and profitability. If you have shared demographic data with other individuals, let's just say family members or other relationships you might have, banks are assessing the value of that relationship as a whole. So imagine if you knew this and were able to use it strategically to advance your relationship with that institution. The bank not only looks at insight on you, but they're looking at the company you keep. Another factor is having multiple income streams coming into one banking relationship. When you put down a household income on your applications and banks can cross-reference this information through your bank account, don't you think that's going to work in your favor? Banks are already bucketing you based on your deposit relationship. In case you didn't notice, they're already looking at the balances you keep and giving an internal bank rating on that, as well as if you're overdrafting your account or not. Many of you may not even know having overdrafts on your deposit relationship can get you denied for a credit card even if your credit is good. So why wouldn't the opposite help your approval odds? I've heard a popular term that comes from the military that says if you want to go fast, go alone. If you want to go far, go together. So when you think about dealing with your banking relationships, you can recreate your image in the bank's eyes or enhance it by having strong, joint accounts, or household-based accounts that have great deposits, great cash flow management, and have been established for an extended period of time. This is only going to work in your favor when you're applying with financial institutions. Now, am I saying this is a major underwriting factor that's guaranteeing you an approval? Not necessarily, but is this something that can push things over the hump for you if you're on the ropes when it comes to underwriting? Or is this something that can maybe even lead to higher limits for you or more offers in the first place? Yes, absolutely. If the bank's going to potentially decline you for the mismanagement of your deposit relationship, then they're sure to assess you as a great client or future cardholder when you're managing your banking relationship properly, especially as a household. The more profitable, the better company you're keeping, the more likely the bank's going to extend more offers to you, increase your approval odds, and possibly even offer you better limits on those cards. Use this to your advantage as you're scaling out your relationship with these larger institutions. They have the technology, the data gathering, and the analytic capability to assess these relationships on levels that the smaller banks and credit unions can't. So use it to your advantage. Hopefully this resonated with each and every one of you. We are all represented by the company we keep, so be mindful. Leverage your deposit relationships, whether it be individual or joint, to advance your finances and not destroy them. Comment down below. Let me know what your banking relationships look like with your family members or any of your peers. Do you have joint and group bank accounts with financial institutions? Have you seen it make a difference for better or for worse? Whether that be scenarios where other people mismanage those accounts and it costs you, or where those relationships are healthy and you've been getting a great response from your bank. Comment down below and let me know what that's looked like for you. To all my pioneers, welcome back. To my new viewers, welcome in. Like, comment, share, and subscribe. Continue supporting this channel and investing in this channel so this channel can continue to support and reinvest back into you. As you heard earlier on in the video, there's a great revolutionary way for you to support this channel and not just get a thank you, but an actual return on your money. There's a link in the description down below. It's a completely obligation free, but you have an opportunity to show your interest and we can get into deeper context for this fundraising opportunity so we can all grow our bottom line. That's right, you get to share in the revenue of this channel, the profitability of this channel when you make your initial investment. So check out the link in the description down below. Other than that, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.